Good evening, folks. This is Anne Marie. Wanted to talk to you a little bit about how to use these spreadsheets that I give you each day in the blog to make money. This is the SPY intraday chart, so we're looking for an intraday trading event. Notice I'm using a 15-minute time frame, and what I've got is the trigger above 170.20 or the aggressive bounce off 169.40. So what I will normally do is put the targets on my chart prior to the day opening, and then I just run it into the formations. Now you can keep these overnight, but these are traditionally intraday trading events. What I would say is, as you get into a target, if you begin to stall there, nothing wrong with taking a little bit of profit, leave yourself minimally exposed into the next day to take advantage of what might be there. But we trade level to level so that we can leave green every day. The goal is, can I make money every day in little bits, right? You're never going to go broke staying green every single day, right? So here's what I do. I have above 170.20. Now this is a very common question. What do I do if it gaps past my entry? The first thing that you need to do is look at the next target. And the next target is 170.55, right? Now if you had taken the 169.40, 170.20 would be the next target after that particular region right here. But we are going to look at 170.55. So let's see what happens. The chart opens up, opens up 170.48. So we know we're above our 170.20. The first thing we need to do is go to the next target and see if the charts are holding nicely. What does it mean to hold nicely? Are your SMIs high? Are you sitting above the moving averages? The answer is yes to both of these, so you are able to take the trade as it moves up and over. You can go to a 5-minute chart and see very clearly that this opened up at 9:30 here. This next one was 9:35. So you can see this pop up above the 50, particularly the best moving average of all to take a look at. You can take the long. Notice the next target, 171.04. Whoops. Let's pull that back. Here's the 171.04 right here. That's the next target in the chart, right? So what do? When it gets up into this region and it's sitting at resistance level 2, it is a very good idea to take some profit. That SPY option was worth early in the day. So the option we would use, and of course the blog tells us that also, the 170 calls, what we would be looking at. So the 170 call was $1.15. All right? So the option at the open was $1.15 as it moved through and held the moving average. Let's say we want to use this level as the next space to be certain. Since we're sitting up above that 50, we want some confirmation. Notice the inflection of that SMI works for us right there. We take the option at 115 to 120, somewhere around there. By the time it gets to 171.04, at around 1 o'clock in the afternoon, the option is now at 150. So if I take this chart at 120, if I take my option at 120, and I have a 30-cent move, then I'm actually moving 25% in that option. So my gains on that one trade from one target to the next is 25%. All right? Every single day you're going to see something like that. Now, if you say to yourself, Well, is it that easy every single time? As long as your formations are holding and you are looking properly for moving averages to be in the right space, that SMI to be in the right space, yes, it is going to be that simple. Otherwise, we're taught to sit on your hands. If you aren't familiar with how to pace yourself properly through those trades, I'd like to introduce you to the fast track. Take a look at it. It's on the Learn to Trade page on the website. It'll give you the leg up that you need. I notice a lot of folks are not well trained, and in the end, the training ends up being free because you get 3 months in the live trading room, or you can say the live trading room is free, but the live trading room is more expensive than the studies themselves. So, that being said, those of you in the SPY membership who are saying, hey, listen, how can I make money? It is very, very straightforward. You buy at your breach target if it comes in and it's gapped up. As long as it holds the gap, look for that 5-minute chart to hold the high and give us a newer high. We know that we have opportunity to go long right there. Our first target, 171.04. It takes a while to get there. Here's the rule of thumb. If you do not break support, which actually is this line, the daily pivot, if you do not break support, you do not need to get out of the long. You just need to pace yourself through it until it gets to the target. Once it gets to the target, always a good idea to take profit. You can leave yourself minimally exposed tomorrow if the charts rise. We may have a very choppy day because it is a Fed day, but if the charts rise, we'll be looking at 171.20. These numbers do change occasionally, but more than often they will stay very, very close to being the same, maybe move a couple of pennies, but just go ahead and pop these levels up there. You want to take the conditional trade. I love taking conditional trades. At the breach of the level, you go long the option at the money and you just set it into the trade and leave it alone. Let it work for itself. It is a great way to trade and certainly is the way that we do it. Take advantage of these levels. The SPY membership is free right now and you can make money every single day. Thanks for joining me.